Hi everyone, welcome to this live from the Big Whale. So we are in a big talk. The Big Whale is an European financial crypto media platform whose mission is to promote the crypto adoption and bridge the gap between institutional and crypto player. We believe that in the future, crypto will take a significant place in the financial system. And to talk about this, I'm with Ken Chia. Hi Ken, how are you?
I'm good. How are you? Thanks for having
I'm
me.
fine. I'm fine. Thank you to be here with us. So, Ken, you are head of institutional at Pendle. Pendle is a DeFi protocol, financial decentralized financial protocol that reached 5 billion in total value locked, largely due to the wave of risk taking. We'll talk about this just in a few minutes. Pendle has been live for almost 2 years and a half now, maybe. Yes, that's correct. So you propose to
Longer
tokenize,
since
oh, longer.
2021. Yeah.
Oh, 2021. Yeah, okay. So we can discuss about this background that is really interesting to describe a launch of a startup or protocol. And you propose to tokenize the yield and develop the derivative market, a new way to make a form of derivative market. So that could be very interesting for traditional player and institutional player. So we're going to start with that. But before, can you just describe the launch of Pendle? Why you choose to be a part of this launch, and what is the core idea of Pendle when it starts?
Yeah, happy to. Thanks for the question. So, I think so. Just for a bit of context and a bit of intro, most of the founding team for Pendle have been in DeFi since 2016, 2017. So quite a long time. Pretty active users in DeFi, and I think the first spark that we had was during DeFi summer in 2020, 21, where there was opportunities for very high yields, high APYs, but really there was no way to secure those rates, at least for a fixed term. So that was a big gap, big problem that we saw very immediately. And if you compare that to, let's say, TradFi markets, obviously it's a much more mature market. There is demand for fixed term and fixed rate markets. The two most prominent ones would be with regards to interest rate swaps. That's more than $500 trillion in outstanding contracts, according
Mm,
to the Bank of International Settlements. So interest rate swaps is one. The second being treasury strips, more than half a trillion in size. Um, and if you think about DeFi and crypto, yield or APY is essentially the number one product in DeFi. So we thought it would be natural to create a market for the number one product in DeFi. And in
mm,
terms of how we like to position ourselves and our aspirations, we've always tried to position ourselves as the Uniswap of yields. So instead of trading spot prices, we want when people think about yield trading and fixed rates, anything yield related, they think about Pendle. So we hope to be able to continue to provide that infrastructure to DeFi markets, and hope to help DeFi mature with more and encourage more sophisticated players to join the space.
interesting. And it's like to tokenize. I use this word because tokenization is a big trend, in a traditional from traditional player. So is it correct to say that Pendle want to tokenize the derivative, and why Pendle could be interesting for traditional player to use in the future your solution and your product?
Yeah. So I think on tokenization, our current implementation of bringing a rates market to DeFi is by doing it in a very DeFi native way. So how it works is we can basically take any DeFi asset that produces a yield, and we can split that into two components. So one being
Mm,
the principal token, or PT for short, and also the yield token, YT for short. This is very similar to TradFi treasury strips, where you can split the principal into a zero coupon bond and strip out the coupon separately. Um, That's in terms of mechanics, and in terms of the use case. Right now, we're pretty focused on DeFi native use cases, and around the whole points and the whole yield narrative that is picking up this cycle as the market is starting to turn. I think we found quite strong PMF, evident from the growth in our key metrics like TVL and trading volumes. But I think where institutional investors come into play, and again, I think institutional investors is quite a big category. So I would split them very broadly into two separate categories. You have, on one hand, crypto native liquid funds, guys who are already very active on chain, come with a lot of size and looking for more yields or to hedge that risk on Pendle. And I think there's a lot of interesting opportunities. Like you mentioned, we've had a lot of success with liquid restaking, and we have a marketplace that has something for everyone, depending on your risk profile. For those who are not familiar with Pendle, I think some of the more interesting opportunities would be 30 to 60% fixed yields on an ETH restaking asset, and I think up till we launched it, I don't think there's anything on the market that is able to do that sustainably, and with a clear traceable source of yield. So that's I would say the primary reason why institutional investors have been looking at us. On the other hand, you have the more traditional institutional investors. I think maybe later down the line, as we launch new features and new implementations on Pendle, they might be interested in terms of hedging their exposure in crypto. But at the moment, it's very DeFi native.
Okay. But in the future, and now, to make some, comparison between the traditional and DeFi, is it correct once again to say that you are kind of derivative market? Because it's very interesting because your token is able to tokenize the time, as a derivative market, and to make some yield from your position in the long term, or in some months, you have fixed yield, you can be liquidity provider. So what kind of example did you take from the traditional sector to build Pendle,
Yeah, like I mentioned, the mechanics is very largely inspired by treasury strips. So taking a US treasury bond and stripping that into a principal zero coupon bond and a coupon strip. If you think about how we have architecture on Pendle, where you can take an asset, let's call it Lido stake ETH, which produces a yield between 3 to 4%. You can split that into the principal token, so PT stake ETH, and the yield token YT of the stake ETH, and both of them would trade independently. And to your point, yes, it is very similar to the traditional rates markets, but instead of running on traditional assets, we're running on DeFi assets.
Okay, yeah, but it could be any kind of asset, for example, oil, real world asset, or any asset can be traded on Pendle, tokenized asset, of course.
For now, it's DeFi native asset, so it has to be a crypto asset that produces a yield. For something like oil, I don't think there is a proxy yet. We don't have an oil token which has a yield. Oil itself doesn't have yield anyways. So yeah, for now it's DeFi native, but yeah, at some point we will introduce new use cases that will expand beyond what we currently offer.
Okay, most of the time we hear that Pendle is very complicated to understand. That's a complicated mechanism. Did you hear that from the traditional institutional player, or it's they are directly understanding why Pendle could be interesting in the future for them?
I think typically the institutional users that we have, they typically have a traditional finance background to some degree, and I think once they connect the dots and understand the inspiration behind Pendle and how we've structured it, very similar to treasury strips, to interest rate swaps, I think it makes a lot of sense for them. And I think it's um, I think it if it clicks for them, it will make sense. But for users who are less familiar with traditional rates markets,
Yes.
definitely a lot more education and handholding required, which is something that
Mm.
we have invested a lot in terms of spending our resources on creating a lot of educational content. User experience and the UI on our app is also very important. So we're always seeking user feedback, trying to make the experience easier to understand where the yields are coming from, what are the risks involved with going to PT or YT or providing liquidity into Pendle.
Mm. Did some big players, maybe you are not able to give some name, but big player ever tried Pendle in the past, or you're just in talk with those kind of player? I talk about traditional player, not a DeFi or crypto player.
Probably not directly. If you're thinking along the lines of a BlackRock or a bank or a traditional hedge fund,
Yes. Mm.
I think they are interested in Pendle, and we have been in touch, but probably more from a conceptual basis. Like they're interested in the concept, but too early for them to be directly involved. I think if there's any involvement, it's going to be via a vehicle. So maybe a structured note, OTC product, or packaged into a fund and then distributed to traditional clients. I don't think um, it's time yet for them to come in.
And why it's too early, you know? Because of the
I think,
regulation, because of the mechanism, because of the sustainability of DeFi. What's your view about
yeah,
this?
everything that you mentioned. So I think regulation is a key one. Uh, in terms of where we are in the whole institutional adoption cycle, we in this past few months we've had obviously the Bitcoin ETF approved. Everyone is now anticipating the ETH ETF next, and I think buying spot crypto tokens will probably be the very first step that these traditional
Mm.
institutions take. When it comes to direct participation in DeFi, there is going to be a whole lot of uh, other obstacles that they need to um, handle before they can comfortably come in. We've seen
In DeFi.
implementations, including permission DeFi, including private chains, and I think it will take some time for them to be fully comfortable with open finance in DeFi.
Mm. And are you, what kind of discussion do you have with those players? You know, they are very knowledgeable, sorry, about crypto. Where is the level, of understanding
Are
of
you
if there
referring to
is a,
the
yeah, to the discussion you have with traditional big player, where is the level of understanding about DeFi and crypto in general?
I think it's a wide range because it depends on the portfolio manager that you speak to. Some of them are quite savvy in crypto and use maybe DeFi on a personal basis, but not something that they can do for the institution that they represent. So there are some that are completely new to crypto, very surface level understanding, but some that are more savvy and familiar with crypto.
Okay, okay. You mentioned Uniswap, and Pendle is like an automatic market maker, or there is a big part of Pendle about this. What kind of problem are you solving with your AMM, automatic market maker? Why is very specific and why is different than especially the V3 of Uniswap, about the impermanent loss, for example. So what kind of problem are you solving with your IMM, and why Pendle is a kind of unique solution, very special?
Yeah. So I think with any DeFi protocol that utilizes an AMM model, that to, let's say, traditional rates markets, either interest rate swaps or treasury strips, the biggest risk that you have in those uh, forms would be counterparty risk. So anything in DeFi, obviously, we try to have it decentralized. We try to remove centralization and counterparty risk, and therefore that's where the AMM comes in. With the way that we've designed Pendle's AMM, I think it is unique in the sense that for all LPs in Pendle's AMM, if you hold to maturity and all our pools have a fixed maturity date, you will basically have zero impermanent loss. And the way that works is because you are providing liquidity for the underlying asset, as well as the principal of the underlying asset, which today, if you LP today, that is equivalent to a zero coupon bond, or a principal token void of the yield component. Hold that to maturity, and it will be redeemable 1-to-1. Hence, there is a zero impermanent loss, and we have done multiple studies in the past 1 to 2 years on the pools on Pendle to prove our claims.
Okay, okay. And what kind of clients or user do you have, and where they come from? They are from Asia, because you're based in Asia, for example, in Europe or in the United States. Do you have some view, an overview about your user of Pendle?
I think it's pretty hard to say because we are a DeFi protocol. A lot of the users and the wallets that we see on our backend is anonymous, so we don't have too much granular data. We don't know where they're coming from, but definitely Asia is a market. I would say Europe is also pretty active, but then again, these are guesses. There are things like VPNs and whatnot. People are able to obfuscate their location. When it comes to type of users, we tend to separate them between whales and institutional clients. And on the other hand, you have the more mass market or retail. Again, we don't have all the data because the wallets are not all fully doxed. But on a conservative estimate, I would say about 30% of our TVL is from institutional investors and whales.
Interesting, interesting. Are you surprised by the rise of Pendle, because you had been launched since, as you mentioned, not a long time ago, but it's like a long time ago for crypto. Are you surprised by your rise in the wave of the risk taking, and how do you explain that it's time for Pendle, to be one of the biggest DeFi protocol in terms of TVL?
To answer your question, yes, we were very surprised. I think when it comes to the restaking narrative and eigenlayer, that's something that we've been watching since early last year. So for context, early last year, when we had just launched the V2 of Pendle's AMM, we started to get traction for primarily on liquid staking. So from Lido staked ETH to SFrax, Rocket ETH, more than half of our TVL at the time was from liquid staking tokens. So I think the natural next step for that sector would be restaking. And we've been monitoring the tech and the developments very closely since last year. Obviously, eigenlayer comes with an element of points, as well as the LRT protocols associated with eigenlayer. They have their own points as well. And one of the design decisions that we've made with launching into the restaking narrative was to associate the yield token, or YT, to accumulate the points, since it is in a way a form of yield. So with that, where it's interesting for almost all players on Pendle, whether you are a YT buyer or a PT buyer or even an LP, there's something for everyone. And we were surprised at the level of success with the first restaking pool that we've had. In January, we launched ETH from EtherFi, and we've since replicated that success across other LRT protocols like Renzo and Kelp, Swell, Puffer, and Bedrock as well. And yeah, we're definitely doubled down on the restaking narrative. But having said that, very surprised at the amount of traction that we've received. But I think that's crypto and DeFi, just a lot of unexpected
Trend
outcomes
and narrative.
Yeah.
No, exactly. For me, you are one of the player want to share a product, to be able to bet, on points,
Yeah.
on yield, on some. How do you explain this trend? Because of of the maturity of the DeFi, with more complex product have
Yeah.
been launched since now 2 years ago or 1.5 years ago, maybe something like this. How do you explain this trend? Because it's a more sophisticated product and so more very interesting product for institutional in crypto and later for traditional players.
Yeah, the use case and the inspiration is quite, I guess, more TradFi and sophisticated use case. But I think what we were able to successfully do is to translate that use case into something that is more interesting for native DeFi users. So again, the number one use case or the number one product in DeFi is yield, and today a lot of that yield comes in the form of points. So we were able to cater a market for points and for yield, and we try our best to abstract away a lot of the
Mm,
TradFi terms and treasury strips. It's all very confusing if you're not familiar, and we just make it easy to access to understand what you're actually buying when you are buying, let's say, a YT token or a PT token and an LP. I think for users, that's all that really matters, especially in crypto and DeFi. Attention is so scarce; it's very hard to keep the attention of the market. So we try to be very clear with our educational content.
mm. Interesting. And for me, there is two kind of startup in crypto. There is some startup wants to be directly with a big traditional player to grow. It's like a normal fintech way. And there is another with a public blockchain. There is some startup crypto native like you, maybe. So how do you explain the difference and why did you choose to especially focus on DeFi and not to work more with big banks or big hedge fund, traditional hedge fund? Because because it's too difficult about the regulation, because the money is in DeFi for now, and it's too complicated to bring crypto really in a traditional world. So how did you choose to be more focused on DeFi?
Yeah, I think it all comes from our team's background. Like I mentioned, most of the founding team are DeFi native folks, so it makes sense to work on something that we're familiar with. For context, some of the founders are ex Kyber Network founding team,
Mm,
so have been in the space building for a while, understand how the business works in DeFi and where the market is moving in terms of direction and what's needed in the market. So we stuck with what we knew. I think there is also a big opportunity to build DeFi or open finance solutions for large traditional players, but we might not be the best team to look at that.
okay, okay. And for you, DeFi, why DeFi has to be mainstream, or more mainstream for the traditional for the traditional system, because it's more efficient, because it's bring more option in terms of financial product. Why, DeFi is interesting when you talk about with the institutional traditional player. Because
Yeah, I mean,
most of the time we are
yeah.
saying that DeFi is only about speculation. It's only on things that doesn't matter, like Egon layer. We don't understand Egon layer. So okay, what is that with your point with restaking? So how do you explain DeFi and the potential ads of DeFi for traditional system?
I think it's quite subjective, and it depends on who you ask. So if you're asking a hedge fund, proprietary capital, all they care about is making money. And
Mm,
if they're able to deploy in size into opportunities in DeFi and it fits their mandate and their risk profile, then that's where they're interested in on the speculation front. If you're talking to, let's say, a very large bank that facilitates a lot of fund transfers, maybe the blockchain element on uh, uh, being able to transfer value 24/7 as long as the chain is live. They don't have to wait for traditional settlement times T+2, T+3. The immutability and how transparent DeFi can be, that might be interesting to them. So I think it really depends on who you ask. It's a very broad category.
Yeah, but for the potential customer of Pendle from traditional side, as you mentioned, so
It's all
especially with a hedge fund or some player like that.
yeah. It's definitely on the interesting opportunities that they see on Pendle, and if it's something that's suitable for them, that's when they get in.
Okay. You know, now we have to talk about this big news came yesterday about the Egon layer launch its token, you know, and with a little surprise for Pendle users because as they are not eligible for the first part of the season one, there is lots of questions mentioned on Twitter, especially. Can you just give us some details about this and about the airdrop for the Egon layer airdrop for the users of Pendle? So just can
Yeah.
you give the roadmap of the distribution of the token Egon layer for users Pendle?
Yeah, so I'll just address the main question first, which is uh, Pendle users, YT holders will be eligible for the airdrops from Eigenlayer. I think in terms of for context, for those who are not familiar, I think there was initially some confusion around the initial announcement from Eigenlayer, from the way that it's worded. Maybe it wasn't so clear, but they've since issued a follow up announcement to clarify, and also all the associated IoT protocols as well as Pendle. We've also echoed that second announcement to further clarify. So very high level on the details. Season one airdrop for Eigenlayer split into two phases. Phase one will primarily be ETH depositors directly into Eigenlayer, and phase two will be anything that is considered as complex DeFi use case. So Pendle falls under that. You have a few other names that are mentioned, such as Gearbox as well. When it comes to the timing of when you're able to claim and to show the amount that you're eligible for, I think there is some difference in the timeline, simply because I think they need more time to calculate how all the different use cases in DeFi, Pendle being one of those use cases, to make sure that they get the accounting correct for all the wallets. And when it comes to distribution, and when users are able to actually receive the tokens and trade and sell those tokens, it will all be the same time. So it really doesn't matter whether it's announced today or in 2 weeks later, because the distribution's at the same time. That's the basic
Okay.
summary. Yeah.
Okay. Interesting. And as we talk about Egon layer, you know, there is, as we mentioned before, a very huge ecosystem around Egon layer, especially for restaking and for trading restaking, for speculation and investment. You know, are you in touch with some player like you know, Etherfi, Puffer, as you mentioned, Renzo, some player like that? You know, what kind of relationship do you have with those players? Because when we interview Shreyam Khan, the CEO of Egan, you know, he just say we have a responsibility about the stability of the market, you know, as big player, you know, around this. So, what kind of relationship do you have with those players in terms of talking about the sustainability of the market and to not reproduce the same mistakes during the past because of the of the misunderstanding and not coordination between players.
So with regards to the liquid restaking projects, we're in touch with most of them. As I mean, it's pretty obvious since we have their pools deployed on Pendle, we have to work with them on things like liquidity, things on the parameters of the pool, the maturities. So we have a working relationship. I would describe that relationship as working partners, simply because if we grow the TVL of their pools on Pendle, it also benefits them. So them being successful on Pendle is also, that success also is attributed back to them. With Eigenlayer, I think it's slightly different. They are obviously more neutral party and try to provide more of infrastructure and the underlying technology that provides the whole restaking to occur in the first place. So I think with EigenLayer is slightly different.
Interesting. And for for Ether5, there is a between you and them, like Renzo Ether5, there is kind of a contract, between you to to operate a pool or to have a pool on your protocol. How is it working exactly?
Yeah, I mean, we were in touch. The teams have a working group whereby our common goal is to grow the trading activity and the TVL of the pools. It's in both parties' interest. It's in Pendle's interest, obviously, because those are our key metrics on TVL and trading volumes. And when it comes to, let's say, a protocol like EtherFi, any TVL that comes into Pendle into EETH pool, that benefits them as well. So we try to succeed together, and we try to create products that are suitable for the market.
Okay, okay. I saw that in the recent months, in the past months, you are making a lot about education, So it's obvious because you want more user, for example, and to understand your product and to be more clear about your product. But for me as a journalist, it's because a part of it's about the regulation, And for now, DeFi overall, it's like a big word to say that, but overall, there is like an auto regulation. There is, of course, some obligation, like sometimes like KYC or to not doing bad things, of course, about the fraud, for example. But where we are about this regulation regarding Pendle, and when did you choose to bring more content about education about your product and why regarding the regulation?
Yeah, I think those are probably two separate questions, right? So one on regulation and one on user education.
Exactly.
I'll address the education first. So I think we discussed Pendle sometimes can be complex, perceived as complex by
And
the way
risky,
it's
yeah.
designed. Yeah, and there are risks involved, obviously, depending on the strategies that you employ. So education is something that we actively invest into spending the resources and the time to create ongoing content. We're probably most active on Twitter, where we share content. We also have partners that either they are fans of Pendle or they're heavy users. A lot of the content is also organically being shared around on Twitter and other platforms, social media. So that is very important for us. I think another important element would be our documentation. We've spent a lot of time making sure that not only our documentation is robust as a good source of truth, but also we do have a Pendle Academy, which is a page that is dedicated to breaking down all the different mechanics, all the different elements you might want to consider when participating in Pendle. So that's on user education. When it comes to regulation, I think DeFi and regulations is kind of an interesting topic, right? It's, I would say, for the most part, still work in progress, and the market is still keeping an eye, for example, on the Wells notice on Uniswap in the States. There's a very big case that's ongoing at the moment, which is why protocols such as ourselves, as we start to grow and as we start to think about limiting our risk and our liability, we have to make sure to at least self-regulate. And what that means is some of the very clear, obvious things to do would be to make sure that we don't serve users from restricted jurisdictions, from OFAC sanctioned countries, all the basic steps that we take to make sure that these users don't even have access to Pendle. So for now, I think most of DeFi is self-regulated to a large extent, simply because there isn't a very, very clear direction.
And you are talking about the self-regulation, auto-regulation, very interesting term, because when you want to launch a product like yours, what kind of mindset we have to apply, to be successful, because most of the time older players, we have to talk about the centralized player like Coinbase or Circle or some player like this. They have been launched since more 10 years ago for now, and they are successful now. So maybe you want to follow the same as a success, you want to follow the same road, And what kind of mindset for young entrepreneur we have to have to build a product with a self-regulation, because self-regulation is very difficult, to follow. So for you, what is a mindset we have to have, to be successful and to build a product in a self-regulation?
I think in general, we try to focus on the right narratives to focus on. So when it comes to Pendle, I think one of the advantages that we have is we actually don't have our own asset, our own product. I mean, we have Pendle token, but in terms of issuing, a market, one of our pools, we're reliant on other DeFi assets. So I think that that makes us, it's very important for us to nail the narrative correctly and to make sure that we focus on the right areas. So in terms of mindset, we're always opportunistic and try not to be. I think in general, the team culture is we're never complacent. We're always looking at. I think the way that we've operated this year, last year, the year before, has always been the same, regardless of where we are in the market and our size and growth. So always, with a growth mindset is where I would say, and especially as we start getting some traction and product market fit, we're getting some users, more users into Pendle. I think that's where we need to start looking at least on the low level, low hanging fruit when it comes to self-regulation and things that we should be looking at. And we take obviously inspiration from other larger DeFi protocols and what they have done, what safeguards they have taken to make sure that at the very least we have these baselines checked out. So yeah, I think that's how we look at it.
Interesting. Okay. And your roadmap, in the following years, in the following months, you talk about the narrative, to take the right narrative. So restacking is still ongoing, of course, but
Yeah.
which narratives are you following, to make some, add on your product of Pendle, in Pendle?
Yeah, good question. I think we've been evaluating the pools that we've been supporting and seeing what works, what doesn't work. One thing that definitely is here to stay, in our opinion, is points and points farming. So that is beyond Eigenlayer, that is beyond Athena, that is
No, yeah.
beyond a
This is a big
specific.
trend. Yeah.
It is a big trend. It is a mechanism that has shown time and time again to be successful for protocols to incentivize and to bootstrap initial liquidity, initial traction in exchange for some loyalty and rewards for their top users. So in our opinion, we think that points will be around for quite a while, and it's something that we're focused on. And points is a very big category, which means that we can be flexible in which type of protocol or which DeFi vertical that we want to get into. So we have that advantage of being flexible. I think one more thing that I can share is that we are also working on the V3 implementation of Pendle. So currently we're on V2. With V3, some of the use cases that you highlighted earlier would be applicable. Such, for example, V3 would be Oracle based, which means that we can create markets on assets that are not purely DeFi native.
Yeah.
So they could be any rates with a reliable Oracle. And we want to create a market that is more similar to interest rate swaps from TradFi. So the use case would be, I would say, more broadly, it would be more sophisticated players, more catered for institutional users. And yeah, more to come as we share more details over the year.
Okay, so it will be possible, like if I'm a big bank, for example, or a traditional market maker, I will be able to create a pool with my own parameters. For example, if I want only some player with a KYC, for example, of in my circle, of investment, I will be able to create a pool like this?
I won't say that it's fully open and available for anyone to create pools. We haven't decided on that direction yet. But I think on a high level, for example, some of the important elements in crypto still do not have a venue to hedge. And one simple use case would be exchange funding rates, where you have funds who have positions with the whole basis farming opportunities with hedging their positions. One thing that they haven't been able to hedge is the longevity of the funding rates, because that's still on a 8-hour window, 3 times a day. They can't hedge that out for 3 months or 6 months. So that's one use case that we are targeting.
Okay. So thank you, Ken. We are together since 40 minutes, so thank you for your time. I have a couple of more questions, but maybe my last question will be that for you or for the Pendle team, where we are about the hybridization, between DeFi and traditional world. Are we far from this? And for you, when we can expect that, a very lots of coming from traditional player in DeFi, when that
Yeah.
will happen, this more mainstreamization about TradFi.
I think it already is happening to some degree, but it will probably happen in a way that is not so obvious. So what I mean by that is, if you look at something like, let's say with traditional players getting into crypto or DeFi, I don't think you will see, like, say, a BlackRock or a JP Morgan come in and say, oh, we're going to open up a DeFi team and LP a bunch of capital in. But I think what you will see, and we do already see this from some financial institutions, say from Europe, that are repackaging opportunities in crypto and or DeFi into traditional products. So, for example,
Really?
into a structured product or into a AI only fund for credit investors, for banks and all these institutions to distribute to their clients. There are hedge funds already that take advantage of some opportunities, for example, around basis arbitrage, pretty good yields in comparison to traditional yields, lending strategies, DeFi strategies, simple, but easy to understand and scalable. So we've seen some examples of that already, and I think that's very promising. Yeah.
And what kind of product, for example, you talk about the BlackRock, the bidder, the money market fund tokenized, for example. That's a simple product, but there is lots of option, to more option as traditional world to have a better yield, and the yield distribute, one day or in 1 hour or in a few minutes. For example, that's kind of product can bring traditional player in the space, for example.
Yeah, I think when you have new products that creates new unlocks and new features in the current status quo for TradFi instruments. So you brought up a few good points. Quicker settlement, more transparency. These are some of the common products with something like a mutual fund or a hedge fund product. So I think there is opportunities for DeFi and crypto to be able to solve some of those issues.
Okay, interesting. And my last question, Ken, so this for our viewer, what will be the next big trend, big narrative in the space after risk taking? That will be the risk taking or another another trend,
Yeah, I think we all have our own personal opinions within the Pendle team, but one thing for sure is, that we don't really know. We have our guesses, maybe.
It's always a surprise.
It's always a surprise, and I think more importantly, we maintain our position as we're flexible, we're able to cater to different use case, and we focus on a narrative that makes sense.
Okay, exactly.
Yeah.
Okay. Thank you, Ken. Ken Chia, so you head of institutional at Pendle, And thanks for all of your viewers to follow this live since 45 minutes. It's always very nice to talk directly with a team from crypto native player, because it's opened the door for our subscribers, who are mainly from institutional, especially in Europe, from big banks, and it's really interesting to give to them some example as Pendle, and to bring some view and more perspective about DeFi in the future of DeFi and of the traditional financial system. So thank you, Ken Chia, once again, head of institutional in Pendle, to have been with us, and maybe have a good night, because it's late in India.
Yeah,
currently.
thank you. Thanks for having me. Yes,
Thank you.
it was a pleasure. Yeah,
Have a good day.
you too.